yesterday I didn't get to weigh in very heavily on ex-New York Fed President Dudley's comments, but CNBC did a wonderful job in that regard, and pretty much everybody I deal with on trading floors was pretty dismayed that a Fed member of that high order, and being a head of the New York Fed is a key post within the organization, would have and harbor such political issues. I'm sure they didn't just crop out of left field after he left, but it doesn't really matter. The president does things that are a bit unusual with regard to how he communicates his thoughts to the Fed. I'm more interested in the Fed's response, and the response was the right response. Basically, forget all that stuff, maximum employment and price stability. The problem is that's a bit of a stretch, too. If you look back at central banks, and particularly our central bank, they really went way over their skis if their two pillars is the only thing that's supposed to give them life with regard to how they interact in the marketplace. Indeed, they and all central banks have robbed all of us of market signals. Markets don't really care about data much anymore in the U.S. They certainly don't seem to care much about all the auctions and the enhanced size and how much T-bill issuance is coming or the debt and debt accumulation that the country has. But these markets will at some point care. It's just that it's very hard to determine when that time is. But consider the Fed's answer. It's all about price stability, okay, maximum employment, which leads me to the thought of, does that mean that the current Fed thinks that lowering rates will address either of those issues and improve them? And that is, to me, is the important issue not to lose sight of, even though they have evolved into kind of Greek gods with respect to how they think they influence the U.S. economy. They went from nudgers to transformers to disruptors of the first order. I don't think lowering rates is going to address those two issues. And Mario Draghi's gotten in front of the Fed in the last meeting, and certainly they're going to do it again on September 12th. But the one thing that Dudley's op-ed didn't mention at all on Bloomberg, and that was, and Ira Harris and I've discussed this, it's the dollar. We're the reserve currency. This president wants to make the most political hay he can. I get it. He wants the economy like a Ferrari to have its fastest quarter-mile time as the election comes, even if it robs that engine of future performance. But at the end of the day, he can also go around the Fed by FX intervention, which Dudley never mentioned. And this is a road less traveled and much more damaging, but this president is determined, and that ought to be a discussion we have. Reserve currencies shouldn't play maneuvering in the FX markets.